Good morning, I'm Lauren Hayes for the Finance News Network. Stocks cut much of their earlier losses Friday as investors looked past hotter than expected labour data to the upcoming Federal Reserve meeting. Stocks dipped after labour data released Friday morning showed payrolls rose by 263,000 in November, a bigger gain than the 200,000 increase expected by economists polled by Dow Jones. The unemployment rate held steady at 3.7%. It was the final monthly employment report before the Fed's two-day meeting, December 13 to 14, in which the central bank is expected to slow to a 50 basis point interest rate hike from the 75% basis point hikes seen recently. The Dow Jones Industrial Average closed up 0.1% after hitting a session low of more than 350 points. The S&P 500 dipped 0.1%, rebounding from an earlier loss of 1.2%. The Nasdaq Composite also made up ground to end nearly 0.2% lower. The tech-heavy index dropped as much as 1.6% earlier in the day. All three major averages ended up for the week, giving them their first two-week winning streak since October. US traded stocks in Chinese companies scored their best week since March as hopes were renewed that the nation might ease up on COVID restrictions. And it appears consumers are spending their savings to stay ahead of inflation data released by the Bureau of Economic Analysis released last week shows that the US personal savings rate dropped in October to 2.3%. How low is that? Well, since 1959, there has been only 1 month when the saving rate was that low or lower. One reason that consumers have been able to get away with spending rather than saving is that they built up a cushion of savings during the pandemic. They spent less while stuck at home and they got $1.5 trillion in stimulus checks and other aid. Right now, though, it appears the US consumers are struggling to maintain a standard of living they can no longer afford. In commodity news, OPEC and non-OPEC oil producers could impose deeper oil output cuts, energy analysts said, as the influential Energy Alliance weighs the impact of a pending ban on Russia's crude exports and a possible price cap on Russian oil. It was mixed across the sectors, with materials outperforming. The SPI futures are pointing to a 0.3% gain. I'm Lauren Hayes. Enjoy your day.